Hey everybody, and welcome to our next video in the Stock Market for Beginners video series set. My name is Glenn Tompkins, Senior Instructor here at VectorVest, and I love bringing this video series to you, especially if you're a brand new investor in the market or if you want to learn more about how the market works. I always invite you to subscribe to the channel, hit the like button, but most of all, share this video with people who are wanting to learn more about the stock market, how it works, and how they can get into the market. The last video we did was setting up a trading plan, and now I'm going to dive a little deeper into each one of the aspects of setting up a trading plan. Now remember, a trading plan has three things: knowing when to buy, knowing what to buy, and knowing when to sell. We're going to start off with the when to buy, and I'm going to approach that from two different perspectives. One, from a market perspective, to know when it's okay to buy when the market is doing well, and from an individual stock perspective, some things to look for before you buy into an individual stock. Now, at the recording of this video, the disclaimer is this is not the right time to buy stocks. So I need to put that out there right away. But I will show you what to look for when the time is right to start to buy stocks. But as I do this video, I'm looking at on our homepage right now, a lot more stocks going down than going up, a lot of red popping up. This is not the right time to buy stocks. And remember, this video is all about when to buy. So I'm going to start off by taking us to the market timing graph. We'll go to the graphs tab, and I'm going to put us on a 1-year graph. This is the market from our perspective. I'm going to take off some indicators, and I'm going to take off the support and resistance. This is the market from all respects because in the VectorVest system, we track over 9,000 stocks, and what you're looking at here is the movement of those over 9,000 stocks. Why do we use it from a market timing perspective? Because we feel that it is a better representation of the broad market move. Now, that's one of the biggest things you need to know in regards to when to buy. When is the market as a whole moving up? Because the direction of the market affects about 80% of the stocks in the market. So it leaves it to be not understood that when the market's moving up, it's a good time to buy stocks. When the market is moving down, it's not a good time to buy stocks. Now, let's start off right here. Here's a good opportunity to go in and buy stocks, right? Why? Because the over 9,000 stocks that we track were moving from a low to a high. Here's a good time not to buy stocks when the market is moving from a high to a low or moving down. So keeping that and understanding that gives a better perspective on when it's okay to buy stocks. Now, that's from a market perspective. Now, whatever software you're using to track the market, you should have some semblance on when the market's moving up or when the market's moving down. Whether you're looking at the Dow, the NASDAQ, the S&P 500, and probably as being a brand new investor in the market, if you do not have the VectorVest software, you probably want to at least take a look at the S&P 500. Those 500 are the most widely traded stocks in the market, and it's probably a good starting point to understand when the market is moving up or down. So let's do this. Let's go put on the SPX, which is an index that tracks the S&P 500. Let's go put that on a 1-year graph, and there you go. Overall, you can use some semblance of movement on the S&P 500 as a way to see when the market is moving from the bottom left to the top right. Here's a good buying opportunity here and here. You can clearly see designed opportunities where the market is moving up, and that's a good time to buy stocks. So currently, as I mentioned, looking at the VVC or the VectorVest composite on the market timing graph of over 9,000 stocks, I said it wasn't the right time to buy. Well, the S&P is telling you the same thing as well. I am looking at moving averages on here, very fast moving averages of a 3 and an 8 exponential moving average. We'll get into that on a different video. But this is a very fast way of getting in and out of the market if you're more of an aggressive player in the market. So no matter what you're using, whether it's the VectorVest system or some semblance of the S&P 500, this is a good way to know when it's okay to buy stocks. So again, let me zoom in on my graph. This is a good opportunity to buy into the market because the market's moving higher. This is what you're looking for before you think about buying stocks. Or go back to the VectorVest composite. This is what you're looking for before you go buy into stocks. So I want you to visually see what you want the market to look like before you decide to go and buy into the market. Right now, the market is not doing what you want it to do. It's going down. So again, the disclaimer still holds true. As of the recording of this video, it is not the right time to buy stocks, but at least visually you know what to look for before you go buy stocks. So let's make pretend. Let's go back in time and let's say right now the market is going up. Well, if that's the case, let's start to think about what stocks we should be getting into. Now, a good place to start is in some semblance of whatever your tool is to get into the market. We have what we call the stock viewer. Remember, we track over 9,000 stocks. These are sorted by our master indicator VST. Again, something we'll get into another video. All I really want you to do right now is to concentrate on the graphs of the stocks. I'm going to highlight the top several stocks, right click, and from a individual stock perspective, let's see what to look for before you buy into a new stock. I'm looking at a 3-month graph on a stock. I don't care what the stock is. All I want you to do is look at some things. I'm looking at moving averages as a way to get in, and I have a 3 and 8. So I want you to write this down. I'm giving you 4 sets of moving averages to use according to how you invest in the market. First, if I'm a really aggressive investor in the market or trader in the market, I like using the 3 and 8 exponential moving averages, all right? And when they cross on an individual stock, when they cross to the upside, the 3 goes above the 8, that's a good buying opportunity. Remember, this is all about when to buy. And as long as the 3 and the 8 stay positive, that's a good time to stay in the stock. So on this stock, it happened on 12/21 of 2021, and it's still going up. Wow, that's what you're looking for. Let's go to the next stock. When did the 3 and the 8 cross? It crossed a couple of days later on 12/23. And look at that. Now, why do I like using moving averages? Because even when a stock pulls back in price, I don't have to panic. Let the moving averages do its work. Now, remember I said I'm going to look at 4 different moving average sets. I want you to write these down. 3 and 8 if you're really aggressive. I want you to look at a 10 and 20. Don't worry about if it's a simple exponential or weighted, just 10 and 20. And for the meantime, for being brand new, I'm going to call them simple moving averages. Look at a 10 and a 20. So let's go add moving average, simple, 10. Do it again. Right click, add moving average, simple, 20. Let's take off the 3 and the 8. Now you're going to see a little difference on when to get in. Let's click the 10 and let's click the 20. So when the 10, which is the lighter line, crosses above the 20, which is the orange line, then that's your opportunity of knowing when to buy. When did that happen? On 12/30. And guess what? They're still in play. That is good for the a little less aggressive but more prudent type of investor. Let's even get more prudenter. Yes, I said prudenter. Let's get a little bit more prudenter. I'm going to uncheck those and put on 2 different other moving averages. So that was the 10 and 20. Let's look at the 20 and 50. Let's right click, add moving averages, simple, 20, right click, add moving average, simple. Now I don't have a 50 here, but I'm going to go down to a 40, and then I'm going to adjust that by hitting the arrow to the upside and move that to 50, 20 and 50. Let's check those. Boom. Boom. So the 20 is the green line and the 50 is the beige line or white line. Now notice how much later it gets you into the stock. How about here on 111? Now, why is that important? Depending on how much confirmation you're willing to use, it will get you into the stock a little later. But do you still have the opportunity to make money? Absolutely. This gives more confirmation of the move using a 20 and a 50 to get you in. So we covered the 3 and the 8, we covered the 10 and the 20, we covered the 20 and the 50, and now let me give you what they call the golden cross, and that's the 50 and 200-day moving average. I'm going to take off the 20, I'm going to leave the 50 on. I'm going to go back to price, right click, add moving average, simple. Now, I don't have a 200, so I'm going to go to the 40, and I'm going to adjust that all the way up to 200. That's the biggest number we have as far as moving averages. And remember, I'm only using simple moving averages for the purposes of those of you who are brand new to the market. And this, again, is what we call the golden cross. Let's go put that on. Now, notice that the 200 is the purple line and the 50 is the white line. Let's see when this got us in. And wow, a long time ago. Now you understand why this is considered a much longer term way of getting into the market. How about here, where the 50 went above the 200, and that was back here on 12/22 of 2020 as a longer term investor. And look at that, I'm still in it. Now notice the price went below the 50-day moving average back in this point, but the 50 never crossed below the 200. As a longer term investor, this is designed to keep you in much longer. And again, this is great for retirement type of people. Let's go to the next one. The 50 and the 200 crossed back here in 2020, and look at that. Now, if you get a little nervous about waiting for the 50 to go back below the 200, how about when the stock's price goes below the 50? That could be a good early entry, or you might want to think about taking half of the position off and let the other half ride. That way you learn to lock in profits on this stock. So this was just a general overview of knowing when to buy, and from the perspective of both a market timing perspective and looking at individual stocks. There's so much more that you can do. But for this series, Stock Market for Beginners, this is a great beginning way or stair-step way to know when to start to think about getting into stocks, both from a market timing perspective and one from an individual stock perspective. Moving averages is just one way to get into the market, but as a brand new investor, let's take it one step at a time. All right, folks, this video is over. And until the next video, which is going to know about when, we already did when to buy. Next video is going to be about what to buy. You're not going to want to miss that. And if you like this series, as much as I love teaching this series, don't forget to share, and hit that like button. So until the next time, folks, see ya.